Good morning. Hi, I'm Emma Davidson from the Global Value Fund, ASX ticker GVF. Today, I'm going to spend about 4 minutes talking about who GVF is, and then I'm going to spend 6 minutes talking about a theme that I think is quite interesting, the disappearance of public markets. Starting off with the Global Value Fund, we are a LIC that goes around the world looking for other LIC equivalents trading at a discount. We are then extremely good and efficient at extracting those discounts out for our clients. The size of the market that we operate in is around 600 billion US dollars, and the underlying assets can be anything from equity to debt to real estate to credit, you name it. When we look to invest, there are two things. The most important thing that we're looking for is a discount. There needs to be a discount in place and a hard catalyst to unlock that discount. The second thing we look for is diversification. We want to diversify across the underlying assets that we have, the benefit of which is risk reduction. And so far, in the 11 years that we've been running the strategy, we have not had a single down year in the time that we've been going. There are only 8 other products in Australia that can say the same. The company has annualized at returns of more than 11% per annum, and I would argue that on a risk-adjusted basis, there is very little that has done better than GVF. That's a bit of a big statement, and I am happy to qualify that statement. We have done better on a risk-adjusted basis, and let me show you what I mean by that. So, if we consider that over the last decade, 11 years, the best performing, easily accessible class of asset has been the equity markets. Here on the screen in front of you, you can see the Australian shares have given us 10% per annum, global shares 13% per annum, and the US 17% per annum. Now, we all know that it's only half, that the returns that we receive is only half of the investing equation. Equally important is the amount of risk that we took to get those returns. In the investing world, the most common measurement of risk is volatility, and I've put those numbers there on the screen as well. If we divide the returns by the volatility, we get what is called a Sharpe ratio. But to me, this ratio is just a simple sort of go-to number that shows you the quality of the returns that you've received. The higher the number, the higher the quality of returns. You can see there, Australia gave us 0.58 for a Sharpe ratio. Globally, we had 1.03, and the US gave us 122, which is outstanding. You know, a Sharpe ratio above 1 is really quite unique. That's all very well and good. We've had excellent quality of returns, but what about GVF? Well, over the same time period, the Global Value Fund has annualized at 11% per annum, but it's done so on a volatility of less than 8%, which has given us a Sharpe ratio of the highest, the 123 there. I've looked at other asset classes too. US credit is a very popular sort of theme at the moment. I've also looked at the top names that a lot of clients will own in their portfolios. And then I've looked at property from a couple of different angles. And I've also looked at 2 very popular listed investment companies that a lot of our clients own. And you can see that if we sort all of these investments in order of quality of returns, you get a good sense of where the quality of returns has come from. And GVF there tops the list. Above the S&P 500, above ACWI, above Australian property, Wesfarmers, etc. So that's a bit about the Global Value Fund.